What's up guys and welcome to WSM Research. On April 14th, crypto exchange Coinbase had a direct listing on the Nasdaq, which initially valued the company at $85 billion. Coinbase is the intersection of hypergrowth technology and cryptocurrency, two of the hottest themes of the past year. Obviously, this spurred massive hype for Coinbase. Since the highs on the listing day, the stock has decreased more than 18%, which potentially represents a buying opportunity if you believe in the fundamentals of Coinbase and the long-term viability of cryptocurrencies. In this video, we'll take a deep dive into fundamentals and financials of the company. Keep in mind that we are not financial advisors, and this video is for entertainment purposes only. Make sure to do your own research and consult with a professional before making any investment decision. Coinbase operates three main business lines. First is the retail crypto exchange, where individual investors can buy, sell, and hold their crypto assets. Secondly, they offer institutional brokerage services to institutional investors and corporations. For example, Michael Saylor's MicroStrategies used Coinbase to convert the majority of his company's cash into Bitcoin in 2020. Coinbase also serves hedge fund clients and other institutions that trade crypto. Thirdly, they partner with other cryptocurrency companies to provide blockchain-related services on the Coinbase platform. This includes crypto trading tools, decentralized finance applications, and even games. Many believe that we are still only scratching the surface of what blockchain can do to revolutionize the financial system. With Coinbase's dominant platform in partnerships with third parties, they stand to be one of the biggest beneficiaries of this future growth. They also have Coinbase Ventures, which invests in privately held crypto startups. Notable investments include BlockFi and Dharma, which allow users to earn interest on their crypto holdings. With Coinbase's expertise in the field, there's a good chance they could invest in some early-stage startups that end up becoming big players in the industry down the line. The crypto trading market is highly competitive and will likely get even more competitive going forward. Many stock trading apps, including Robinhood, also offer crypto trading, which competes with Coinbase. Today, Coinbase is the leading crypto exchange by a long shot with 43 million verified users. That's almost double their 23 million users in 2018. So far, their first mover advantage and user-friendly platform has given them great success. Coinbase makes the vast majority of their revenue from transaction fees it charges its users. The fee structure is convoluted and varies across countries. In the US, if you buy or sell a crypto with your Coinbase wallet, you'll be charged a 1.5% flat fee. On top of this, you'll be charged a variable spread fee that averages 0.5%. Adding these together, you get on average a 2% fee every time you buy or sell on Coinbase. This can quickly add up if you trade frequently. Today, all major stock brokerage apps in the US offer commission-free trading. Over time, the commissions on crypto trading should go down just like they did with stock brokerages, driven by competition from Robinhood. This is a major risk for Coinbase because they make 95% of their revenue from transaction fees. Here's Coinbase CEO Brian Armstrong addressing this very issue on CNBC.
Last year, 96% of Coinbase's revenue was generated through transaction fees, which is an issue that a lot of investors have been focused on. I asked Brian Armstrong about the impact of greater competition over the long term on those fees.
We haven't seen any margin compression yet, and I actually wouldn't expect to see it in the short and the midterm. The reason is that, well, for one thing, crypto is just changing so quickly, and it's actually accelerating in the pace of change, both in terms of number of assets and all the things that people want to do with crypto. So there's no real risk of commoditization happening yet. I guess the other thing is that there's really a custody fee that's sort of baked into the transaction fees, which is a little different than in the traditional brokerage world and things like that. So I don't expect there to be fee compression short and midterm, but longer term, yes, I do think there could be fee compression just like in every other asset class out there. And so what you've seen is in our financials, we've started to invest in different revenue streams that are starting to provide these green shoots of revenue, and things like Coinbase Earn, Coinbase debit card, staking revenue, ways that people are earning yield on their assets. And we've started to monetize a number of things like this. Our custody business for our institutional customers, for instance. So these are providing more steady, predictable streams of revenue. And my guess is that in 5 or 10 years, you'll see that be maybe even as 50% or more of our revenue.
Crypto is still in its early stages and is in many ways more complicated to perform transactions compared to stocks. It will likely be multiple years before there is meaningful fee compression. In the meantime, Coinbase is leveraging their brand and technology to offer new crypto-related product offerings that will allow them to earn more non-commission income. For example, they're going to launch a crypto-based debit card. If these new business areas can work out, this could offset any fee compression in the long run. Coinbase recently released provisional results for the first quarter of 2021. They experienced massive growth in the first quarter with revenues of $1.8 billion. To put this into perspective, this is 40% more than the $1.28 billion of revenue they generated in the entire year of 2020. They also made between $730 and $800 million of net income in the first quarter. This is roughly 5 times the $127 million of net income they made in the full year of 2020. However, we must be careful with extrapolating these strong results. Bitcoin had a massive rally in the first quarter, more than doubling. This drove tremendous hype from retail investors and institutional investors alike. The increased trading of Bitcoin increased the trading volume for Coinbase and thus boosted their financial results. Bitcoin will not double every quarter going forward, so their future results will likely be much weaker going forward. To get a better picture of what Coinbase can earn during more normal times for Bitcoin, we will analyze the full year 2020 numbers. In 2020, Coinbase's revenue experienced extreme growth over the past 2 years. Their total revenue more than doubled, increasing by 150% in 2020 compared to 2019. In 2020, they made $1.28 billion of revenue. Of that revenue, $870 million is lost to operating expenses, including things like transaction expenses, technology and development, and general administrative. After these expenses, they made $127 million of net income. That gives them approximately a 10% net profit margin after all expenses and taxes, or a 30% profit margin before income tax. That's very good for a newly listed company. The vast majority of newly listed tech unicorns are not making any profit when they are first listed, and many of them aren't even profitable for many years, if ever. So it's actually very encouraging that Coinbase is already making enough revenue and has little enough expenses to be making a very significant profit already. But the story gets better from here. Many of Coinbase's most significant expenses will not scale with growth, which means that as they grow, their profit margin will continue to become a higher percentage of profit, supercharging earnings. Take a look at this bar chart of Coinbase's income statement from 2020. Starting from the very left, we have their total revenue of nearly $1.3 billion. Then, going towards the right, we have their itemized expenses. The first expense is their transaction expense, which amounted to $135 million in 2020. We also have technology and development expenses, sales and marketing, general and administrative, and other expenses. The total of all those expenses is the orange bar labeled total expenses. What's left is the net income to shareholders in green. That's the part that investors ultimately care about. How much net income can a company generate in the future? Let's go back to the itemized expenses. You'll probably notice that some are in red and some are in yellow. The red expenses are expenses that will probably scale with revenue. Transaction expenses will be proportional to the activity on Coinbase's platform, so as Coinbase grows, you would expect transaction expenses to grow by the same multiple. Other expenses is also in red, because we assume for the sake of being conservative that miscellaneous expenses will also grow with revenue. But technology and development, sales and marketing, and general and administrative are all in yellow. These are significant expenses, but all expenses that are more discretionary in nature and will not have to grow in proportion to revenue growth. Technology and development is likely largely attributable to developing their infrastructure and trading platforms. Sales and marketing is already low, but Coinbase is already the market leader in the industry, so they probably won't have to increase sales and marketing by that much even as their revenue grows. And general and administrative is the type of expense that has a fixed overhead and likely won't grow as quickly as revenue, especially because 2020 general and administrative is inflated due to the expenses of going public. So for the sake of example, let's assume that as Coinbase grows, these yellow expenses lag revenue growth to the point where they're only about 1/2 of what they are now as a percentage of revenue. If that were the case, then in 2020, that would be like if all the yellow expenses were cut in half. That would cause their total expenses to decrease significantly, and their net income to increase dramatically as their profit margin balloons. Their net income would be more than $400 million, giving a 1/3 profit margin. That puts shareholders in the prime position to benefit from revenue growth. Now let's take a look at their balance sheet. Coinbase has an almost flawless balance sheet. They have no debt whatsoever, and their only significant liabilities are the customer custodial funds that they are holding for customers, which also shows up in their assets anyway. In addition, they also have more than $1 billion of cash, the ultimate liquidity asset. This is more than enough working capital for them to be able to fund their own growth for the foreseeable future. The bottom line is that you probably won't see any interest expense eating away at their earnings because they have no debt, and you probably won't see them diluting shares by issuing new stock in order to fund new growth. This is a balance sheet that Warren Buffett would call a fortress with a moat around it. The main risk factors with Coinbase, however, and they are significant, are threefold. If crypto ends up being a fad that comes and goes within a few years, it could destroy Coinbase's business. You have to be a strong believer that not only is crypto here to stay, but it is here to grow. The second risk is if competitors come into the space and drive down fees. Coinbase gets the majority of its revenue from its high fees, which start at 2% of all transactions. If competitors take market share by offering lower fees, Coinbase could lose revenue quickly. And third, its valuation right now is discounting a future in which everything goes perfectly for Coinbase, leaving no room for error. With a market cap of around $80 billion when accounting for all the diluted shares, they are trading at around 60 times sales. Based on our optimistic scenario in which they are able to achieve a 33% profit margin, in order to reach a 20 times earnings multiple, they would have to grow their revenue to $12 billion, which is 10 times what it was in 2020. So you have to be a big believer not only in Coinbase's competitive position within the industry and their ability to scale profitability, but you also have to believe that cryptocurrency will continue to become more ubiquitous to the point where Coinbase's revenue can 10x. Only then will it have achieved a 20 times multiple based on today's price. But don't take our word for it. What do you think about Coinbase and the future of cryptocurrencies? What are your strongest convictions in the markets today? Let us know in the comments section below. Also, make sure to like and subscribe so you don't miss our future uploads. As always, thank you so much for watching, and we'll see you in the next video. WSM Research, signing out.